Hello, welcome to Morris Money, where we give you stock tips in under 5 minutes. I'm your host, Willie. Today, I'm talking about why Snap stock plunged more than 25% after their third quarter results. Snap shares fell more than 28% Friday after the social media company announced their weaker than expected third quarter earnings. Snap gave Wall Street's first peek into the current state of the struggling online ad market. Here are some of the key numbers. Earnings per share was 8 cents for Snap. Revenue came in at $1.13 billion versus $1.4 billion expected, and the company had 363 million global daily active users versus 358.2 million expected. Snap's third quarter revenue grew 6% from a year earlier, the first time it dipped into single digits since the company's public market debut in 2017. Meanwhile, even as it reported a surprise-adjusted profit, Snap's net loss surged 400% to $360 million, partly due to a $155 million restructuring charge. Daily active users increased 19% year over year, showing the company is still able to attract people to the service despite the struggles on the business side. Average revenue per user was down 11% to $3.11. In August, Snap announced that it would lay off 20% of the company's roughly 6,000 employees as part of a major restructuring plan. Severance and related costs made up a big part of the restructuring charge in the period. In a letter to shareholders, Snap said, "Our revenue growth continued to decelerate in Q3 and continues to be impacted by a number of factors we have noted throughout the past year, including platform policy changes, macroeconomic headwinds, and increased competition." The company went on to say, "We are finding that our advertising partners across many industries are decreasing their marketing budgets, especially in the face of operating environment headwinds, inflation-driven cost pressures, and rising cost of capital." Snap also said that it wouldn't give guidance for the fourth quarter, making a second consecutive period in which it's chosen not to offer a forecast. Snap added that revenue growth is likely to keep decelerating in the fourth quarter, as that period has historically been relatively more dependent on brand-oriented advertising revenue, which declined in the last period. Apple's 2021 privacy updates to iOS remains a barrier in Snap's ability to track users across the web, thus weakening its online advertising business. Rival social media companies, most notably Facebook, have been similarly hurt by Apple's changes. Facebook's parent Meta reports quarterly results next week, which, if you want me to cover them, I can. Let me know down below. To show you just how severe Snap's decline in price has been, Snap shares have lost over 3/4 of their value this year and are down more than 30% since July, when the company reported second quarter results that missed on the top and bottom lines. With the stock closing down over 28%, the stock is at its lowest levels since early 2019. Snap's results are anything but promising, and it goes to show you the current market conditions, especially for tech companies. As I noted earlier, Apple's privacy updates have affected many technology companies, Snap included, and you have some other names like Facebook, Pinterest, amongst others that have all struggled this year, and as we've seen, to be precise, Snap shares are down over 80% this year. Can the company make a rebound? It's always possible. But as of right now, the company needs to figure out something fresh, new, innovative for the company. Currently, Snap has the Snapchat Premium service, which reached over 1.5 million paying subscribers in Q3 and is offered in over 170 countries. And this goes for $3.99 a month. It's a start for the company, but in the report, they also said that they plan to reduce costs, and it shuttered most expensive projects they have going on, including its Pixie drone, which they plan to sell for $230. In addition, Snap also cut the production of its Snap Original Premium shows. In order to stay afloat, the company has to find a way to segue around ads or innovate the way that they present their ads. In addition, I don't think that they can rely on their Snapchat Premium subscription, because while that will bring in some revenue for the company, I'm not sure how many people would actually pay month by month for Snapchat Plus. But maybe that's just me. Let me know what you think about this quarter down below, and let me know any other thoughts you have on Snapchat stock right now. Please don't take this video as financial advice, and thank you for watching Morris Money.